Nobody's ready for what's coming next. Bitcoin's hidden catalyst. The market's in full panic mode right now. Fear and greed is scraping the floor. Bitcoin's trading just above $102,000 today. And somehow everyone thinks the story ends here. And I wish I could just grab everyone and shake them and have them realize it's not over and they need to pick their heads up and stay focused and see the bigger picture, or they're gonna get left behind. Because in this moment, right here, this is the setup. The charts are loud, but the truth is louder. Something is about to break wide open. And when it does, every trader who gave up this week will wish they had paid attention. So let's get into it. Let's take a look at sentiment right now. The crypto fear and greed index just dropped to around 20, which is the lowest since the April 2025 crash. Traders are acting like it's over. Headlines are screaming that Bitcoin broke its 50-week moving average. But when you zoom out, this kind of a correction is standard behavior. Historically, every Bitcoin bull run has pullbacks between 20 and 40%. In 2017, for instance, it was minus 40 and minus 38. And in 2021, the same thing. Even this cycle, down 21%, fits the pattern perfectly. So why does it feel worse this time? Because fear is louder than math. Every cycle has that moment when emotions take over logic. Dan Tapiro said it best. Bull markets don't end when everyone's panicking. They end when everyone's euphoric and celebrating. And right now, we're nowhere near celebration. This is the fear zone, the kind of environment that shakes belief before it resets the trend. And when we check on-chain data, the story flips completely. Short-term holders, which are basically the new money that FOMO's in at the top, has capitulated. The realized profit and loss ratio for that group dropped deep into red, exactly like it did at the 25K bottom in 2023 and the $54,000 reset in 2024. That's what happens when top buyers throw in the towel right before the market turns. It's how bottoms form. And at the same time, long-term holders are stacking like it's the middle of a bull wave. Addresses that never sell added more than 375,000 Bitcoin over the last month alone. These wallets have one rule: they only buy. So picture this. New traders are exiting while conviction buyers quietly fill their bags. That's not weakness. That's fuel waiting for a spark. And here is where it gets very interesting. The reason prices feel heavy isn't just emotion. It's liquidity. Since August, the US government's been building cash reserves in what's called the Treasury General Account. Think of it as the government's checking account. And every time that balance rises, it pulls money out of the system. The reverse repo market, which normally acts like a savings valve for banks, it's already drained. Quantitative tightening is still running. And the result? Liquidity locked away instead of flowing through markets. Arthur Hayes summed it up perfectly in this chart. Liquidity down 8% since July, Bitcoin down 5%, and all because the treasury balance keeps climbing. It's the same idea behind Raoul Paul's window of pain, as he puts it. When liquidity tightens, risk assets drop first. Crypto feels it before stocks do. Now add a record-long 36-day government shutdown on top of that, and you get the tightest liquidity since 2019. What we're seeing right now is a dam full of water with nowhere to go. The hidden catalyst starts forming the moment the pressure builds too high to contain. And when the shutdown ends, everything will change fast. The Treasury will start spending again, somewhere between $250 and $350 billion pouring into the economy through payrolls, contracts, and payback. That single act floods liquidity back into markets. And at the same time, the Federal Reserve just made its quiet pivot. Ray Dalio called it stimulating into a bubble. The Fed officially ended quantitative tightening. More liquidity, lower real yields, more demand for risk. And if you've been around long enough, you've seen this before. In 2019, during the last US shutdown, Bitcoin fell about 20%, then rallied more than 300% once the government 100% reopened. Same pattern, bigger scale is all. So while the market argues on X, the builders are scaling quietly. Wintermute's latest report calls this a self-funded phase. Global liquidity is strong, but inflows into crypto have slowed. Stablecoin supply, ETFs, and tokenized treasuries all plateaued. That just means capital is rotating inside the system until new inflows return. Meanwhile, Solana, Polygon, Fireblocks, Ton, and others have just launched the Blockchain Payments Consortium, which is a new alliance to standardize cross-chain stablecoin payments. They're building rails for a $20 trillion on-chain payments industry that already surpasses Visa and MasterCard in volume. Institutional stablecoins are exploding. PayPal's PYUSD hit $1 billion in circulation on Solana. Paxos global dollar, USDG, reached $655 million within months of launch. Stablecoins now make up 43% of Solana's $35 billion ecosystem. And Robinhood just reported record crypto trading revenue, $268 million in Q3, and is rolling out stock token trading across 30 European countries. And at the top of the policy chain, President Trump announced the US will become the Bitcoin superpower, officially ending what he called Washington's war on crypto. So it's so important to lift the veil and realize that beneath the panic, all the gloom and doom in the air, the entire financial infrastructure is being rebuilt. That's the quiet boom nobody is talking about. Now let's talk about the narrative reversal, because every cycle has a new story. And this time, it's privacy. Zcash has become the surprise leader too, up more than 700% since late September, surpassing Monero as the top privacy coin. Grayscale reopened its Zcash trust, and a major protocol upgrade called Orchard pushed shielded transactions to nearly 30% of supply. Binance Research says transaction on the top privacy networks jumped 30% in October alone. So we see Zcash daily activity soared 160%, and even Ethereum is integrating zero-knowledge privacy layers. So the message is clear. People want financial discretion again. Privacy isn't disappearing, it's becoming infrastructure. So when we put it all together as we close out today's video, the picture looks very different from what you see in the headlines, and I hope you see that. Liquidity pressure has been building for weeks. The Fed has quietly flipped. Global policy is aligning. Holders are accumulating. The real believers are accumulating the whales. Builders are continuing to scale no matter what. And privacy is becoming the new frontier. This is the hidden catalyst, the silent convergence that flips markets while everyone's still afraid. Every cycle ends with the same story. Fear hits its peak, traders all exit, and the system resets underneath them. Then the flip begins. The hidden catalyst is already here. The market just hasn't caught up yet. So stay ready. I'm so happy you haven't despaired. I know so many people have, and they're going to regret it. Everyone who has sold during this time is going to regret it. And if you're watching, I hope that's not you. I have a feeling it's not you. I love you so much, and I'll catch you guys here tomorrow.